This is NDTV, and you're watching NDTV Profit.
Hello and welcome. You're tuned into NDTV Profit, a special coverage when it comes to TCS numbers. The PAT is flashing on your screen. There's a host of things that we've actually mentioned. Hang in there because we'll surely be getting back to you. But before that, a lot of other details have come up. TCS Q1, the attrition rate is at about 12.8%, pretty much on expected lines, but its BPO segment, which has actually taken a hit, attrition has actually risen to about 20.5%. And for them, the major markets, which is going to be North America, Europe and UK, have grown about 8%. We're going to wait for further breakup coming in. But meanwhile, we join with Nitin, research analyst joining us from Centrum Broking. Nitin, how do you read these numbers that have come in for Q1?
The numbers, if you look at the top line, we think top line is pretty lower than, marginally lower than what we had expected. The overall, if you look at the figure, is 6,411, which is actually a 5.2% growth. So net, if you see the average rupee rate, the rupee would have contributed around 4.1%. So net, whatever growth they have actually seen would be around 1.1%. So that is something which is pretty flat, very flat on that front. So there could be two reasons. One is pricing could have fallen significantly, or volume growth is very flat or has fallen marginally. Now, another thing that is a point of concern is if you look at last quarter, they actually added 53 clients. Even in the previous quarters, they were in the range of 50 clients added per quarter. But this quarter, we're looking at somewhere around 35 clients being added in the quarter, which I think is pretty low. So we really need to, wait and watch what really happened this quarter, speak to the management and see what actually has happened in this quarter. Because it is pretty low, even on a historical basis. The total client adds is a little low. So we need to really see what actually happened in this quarter.
Absolutely. And Nitin, if I look at it, operating profit margins, I still don't have it flashing on my screen, but what is your expectations now with the PAT numbers coming in, even the top line coming pretty muted? Do you feel that's likely to be dented for the company?
I think the margins should be pretty decent. It shouldn't be it shouldn't be quite low because the top line is low, but margins are, I think, should be, it shouldn't have fallen that much, as much as we had expected. That is what I think.
All right. So what he's mentioning is attrition rate may not be a worry, but what he's talking about is he's added about 35 new clients, which is on the less side because on an average you see about 50 clients being added quarter-on-quarter basis. Nitin, what's your take? Because now there are worries in terms of the client additions for sure. We've just discussed that at length. But how do you read the segment-wise breakup coming in for TCS?
The segment-wise breakup, I haven't got it. I'm just going through it. So let's see what we really need to see how it has actually transpired. So we'll see the overall breakup. I think rough cut. I think it has come down a percentage, roughly less than a percentage point for BFSI overall as a contribution to revenues. So as far as the exact growth figures are concerned, we really need to work it out and see how it is. But we need some time before we really actually come out with the exact impact of those. But overall, it does look a little lower than what we expected on the overall operating metric side as well.
All right. So clearly he's
actually are pretty decent. It is exactly as what we had probably estimated. So on that front, it is pretty decent, yes.
Okay, so BFSI contribution is at about 42.5% versus 43.8%. So some bit of deterioration coming in when it comes to that particular segment, especially when we're very cautious of the slowdown kicking in US markets, and that's going to be pretty moderated earlier. Well, Nitin, you're still there. I wanted to figure out, I was actually going through the offshore and on-site breakup. The offshore has actually come down on a quarter-on-quarter basis to about 40.9% versus a 42.1%. So clearly, for most of the IT companies, this is where the margins actually come up. Now, with offshore actually falling, do you see margins are likely to be slightly more tight?
See, if you look at the overall results, margins are actually not actually fallen as much as should have. But the thing is, if you look at on-site, in spite of on-site being higher, we are actually seeing revenues not actually growing as much as it should have. So actually, revenues have been under pressure if you look at that. And even if you look at the client metrics, you look at the BFSI has come down. You look at the top 10 clients, it has come down close to around 70 basis points. You look at even, let's say, in terms of the large clients, there are no addition this time. because last quarter you had 2 clients in the region of $250 million added and around $450 million type of clients. So net this time in terms of client additions, incremental business has not been significant. It's been not much to talk about. You look at the active clients as well. That again has come down from around 904 to 885. So net, there is pressure on the client front, on the client side, and that is visible on the revenue side as well. So we really need to see as to what the management has to say about that.
All right, time for a short commercial break right here on the show. We'll be back and we'll be getting you the live press of TCS. Stay tuned.